NIO Incorporated, NYSE, NIO, is a Chinese electric vehicle (EV) maker that has seen its stock price collapse in recent months. The company's shares have fallen by more than 80% from their peak in early 2021, and there are a number of reasons for this decline. One of the biggest factors impacting NIO's stock price has been the COVID-19 lockdowns in China. The lockdowns have disrupted NIO's production and sales, and they have also weighed on the overall Chinese economy. In the first half of 2023, NIO's deliveries fell by 22% year-over-year. Another factor impacting NIO's stock price is the rising competition from other EV makers. Tesla is the dominant player in the Chinese EV market, and other Chinese EV makers like BYD and XPeng are also gaining ground. NIO is facing increasing pressure to compete on price and performance. The global economy is facing a number of headwinds at the moment, including inflation, rising interest rates, and the war in Ukraine. These headwinds are weighing on consumer spending and investor sentiment. As a result, many growth stocks, including NIO, have been hit hard. NIO has raised a significant amount of capital in recent years, and this has led to some dilution concerns among investors. The company has also issued convertible bonds, which could further dilute shareholder ownership if they are converted into shares. NIO has faced some execution challenges in the past, such as production delays and quality issues. These challenges have raised concerns among investors about the company's ability to scale its business and meet its growth targets. Despite the recent challenges, NIO remains a leading player in the Chinese EV market. The company has a strong brand and a loyal customer base. NIO is also investing heavily in new products and technologies. However, the company will need to address the challenges it is facing in order to regain investor confidence and turn its business around. NIO's margins are thin. NIO's profit margins are lower than those of other EV makers like Tesla and BYD. This is because NIO is still in the early stages of growth and is investing heavily in new products and technologies. NIO is dependent on government subsidies. NIO relies on government subsidies to make its vehicles more affordable for consumers. However, the Chinese government is reducing its subsidies for EVs, which could put pressure on NIO's margins in the future. NIO is facing increasing competition from traditional automakers. Traditional automakers like Volkswagen and BMW are investing heavily in EVs. This increased competition could make it more difficult for NIO to maintain its market share. Overall, there are a number of factors that have contributed to NIO's stock collapse. The company is facing challenges from COVID-19 lockdowns, rising competition, macroeconomic headwinds, dilution concerns, and execution challenges. However, NIO remains a leading player in the Chinese EV market and has a number of strengths, such as its strong brand, loyal customer base, and investment in new products and technologies. What could NIO do to turn things around? NIO can take a number of steps to turn things around and regain investor confidence. These steps include improving profitability. NIO needs to improve its profitability by increasing its margins and reducing its costs. This can be done by scaling up production, improving efficiency, and increasing the average selling price of its vehicles. Reducing its reliance on government subsidies. NIO needs to reduce its reliance on government subsidies by developing new products and technologies that are more profitable. The company can also focus on expanding into new markets, such as Europe and North America. Improving execution. NIO needs to improve its execution by reducing production delays and quality issues. The company can also focus on improving its customer service and brand awareness. A global recession would likely have a negative impact on NIO's stock price. Consumer spending would likely decline during a recession, and this would weigh on demand for EVs. Additionally, the global economic slowdown could lead to a decline in investment in the EV sector, which could hurt NIO's ability to raise capital and invest in new products and technologies. However, it is worth noting that NIO may be less affected by a global recession than other automakers. This is because EVs are seen as a more environmentally friendly and sustainable form of transportation. Additionally, NIO is targeting the premium EV market, which is less sensitive to economic downturns. What are the long-term prospects for NIO? The long-term prospects for NIO are positive. The global EV market is expected to grow significantly in the coming years, driven by factors such as government support for EVs and increasing consumer awareness of environmental issues. NIO is well positioned to benefit from this growth, as it is a leading player in the Chinese EV market and has a strong brand and loyal customer base. However, it is important to note that the EV market is becoming increasingly competitive, and NIO will need to work hard to maintain its market share and profitability. The company will also need to address the challenges it is facing, such as COVID-19 lockdowns, rising competition, and macroeconomic headwinds. Overall, NIO is a high-growth stock with a lot of potential. However, it is also a risky stock, and investors should carefully consider the risks involved before investing.